Hey everyone, me Kevin here. The Federal Reserve just spoke in detail about the future of the economy, and they had some pretty big and bold things to say about not just stimulus, but also about the market going forward. Stocks, real estate, all mentioned here. We started out by listening to Jerome Powell mention that the housing sector has fully recovered. I thought that was odd because I never really saw the housing sector fall. We'll hear more about the future of the housing market crash potential in just a moment, though. We heard him start off with saying, look, we're recovering more quickly than expected. The pace of the recovery has moderated, but overall the economy improved way faster than we expected. The Federal Reserve anticipates that unemployment will be 5% at the end of 2021. There are zero inflation projections that indicate the Fed actually thinks inflation will be sustained up until realistically 2023 to 2024. In fact, we can look up their, this looks a little complicated, but we can look at their sheet here. The projections that we have in 2023 is that we'll have in 2023 an unemployment rate of 3.7%, inflation of 2% in 2023, but nothing higher than that in 2023 or in the long run. Just really not seeing inflation. And this was a big part of his conversation. In addition to not seeing the interest rates at the Fed going up until basically after 2023. Let's move on now to some of the other things that Jerome Powell said, especially regarding the market and stimulus. So regarding the market, he mentioned that obviously in the short term, we expect that the next coming months will be very challenging, was his verbiage, that mobility data is slowing down and the next 4 to 6 months are a big problem. He says the case for stimulus is very, very strong, that the expiration of unemployment payments, the eviction moratorium expiration is a very important case, and it shows that and we know that there is a need for households and businesses to have this fiscal support and stimulus. More on stimulus coming up. I'm just going in the order of his press conference here. First quarter, he says, the first quarter of 2021 will show significant effects of the drags on our economy. And he is then asked, how bad can this get? And he responds to this and says he's not entirely sure how bad things can get, but he says if things worsen, he and the Federal Reserve Board are prepared to introduce more monetary support to the economy, basically printing more money. When he's asked about housing prices, and this was very important here. When asked about housing prices being so high and about housing prices being a concern, he says no. Housing prices are not a factor of concern. This is pent-up demand because of the shutdown and because rates are low. And he says that real levels of demand will be more manageable going forward, but that home builders the Federal Reserve has been talking to say that this is unlike anything they have seen in 30 to 40 years. And Jerome Powell ends the housing market portion by saying that housing prices themselves are not a financial stability concern. AKA, this is a huge slap by the Federal Reserve at any market crash enthusiast hoping for a market crash so they can buy real estate inexpensively. Obviously, you know, what my opinion is on this, we'll maybe talk about it in a different video, but Jerome Powell, the Federal Reserve, is saying housing prices are not a concern. Rates are low, demand is high, pent-up demand is here. This is expected, basically. And that, in essence, the Federal Reserve sees no real estate crash coming. Certainly assuming we get some sort of rental relief. And I'm injecting this, right? I'm assuming he's expecting the stimulus package to pass so that we get the rental relief and we don't see an eviction crisis. And I mean, I kind of have to agree with that. If we take the eviction crisis part out, maybe we don't see a catalyst for a real estate market crash. Then he says we can do more. We can purchase, we can expand asset purchases. So basically we can print more money. He also says we can focus on longer run asset purchases to create more stability for the long run for the market. He also, and these are changes that they might make if situations worsen in the future. He says, but the help people need is stimulus. People need stimulus. Households need support. But obviously the Federal Reserve can only lend, they cannot spend. This is something he's reiterated many times before, and he made it very clear in this press conference today that they want to see more support for households and individuals. He says that herd immunity is expected, and this is his estimation. He made it very clear that this is just their guess. They're the Fed. They're not doctors, right? They expect herd immunity to come as early as the middle of next year, but they do believe it'll come in the second half of next year. On inflation, this was like fascinating. Okay, so, and this is really important because it has these long-run implications for interest rates and everything. So on inflation, he says, we face significant disinflationary pressures, and this is common when you have an economy that matures. You tend to get less inflation over time. When you have technology, you tend to get less inflation over time. He says regarding inflation, it's not going to be easy to get to 2% inflation again. He thinks it's going to take a long time to get to 2% inflation. I mean, and this reiterates what he says in their projection sheet, because look, if we go to their projection sheet, they don't tell us, realistically when they think they're going to get above that 2% target. They say we want to target 2%, but they also, to average out inflation being higher than 2%, we got to shoot higher than 2% for a few years. They don't even chart that, a higher than 2% inflation. So he sees a lot of headwinds to actually getting inflation up, which is weird because at the same time, you got Bitcoin skyrocketing because a lot of people think inflation is coming and it's here to stay, that inflation is going to be a big issue, especially when talk of these stimulus checks coming up came out last night. We saw Bitcoin rally today. In fact, Bitcoin right now, it's still rallying. Bitcoin right now, look at this here on screen now, you're going to see Bitcoin. I get the notifications out of here. It's at $20,841. It's up 7% today. Had a little bit of a dip here, but rallying again on these stimulus talks. People believe that these stimulus talks are going to usher in a lot of inflation. The Fed doesn't see it. In fact, the Fed said when he was asked, hey, can't we just have inflation faster if we just print more money? And he says, we have to be honest with ourselves and we have to be honest with the public. Even with higher levels of asset purchases, it'll take some time. And we see that trend. We see the disinflationary trend holding us down. He says we have to be honest with ourselves. It's going to take time to get inflation to come. You look at the Bitcoin charts and it's like inflation's going to be here tomorrow. Like sell everything, hide your kids, hide your wife, put all your money over into Bitcoin. You look at the Federal Reserve, they're the polar freaking opposite. They're like, we're printing a lot and we're not seeing inflation. Even if we printed faster, we don't think we'd see inflation right now. That is a huge statement. He says, then, oh my gosh, this was so big too. So then he talks about what about the market going forward, like the future of the market. And this is where he said, I mean, you've got to get 4 free stocks with Webull. No, obviously. But do get 4 free stocks with Webull and deposit $100 to get those 4 free stocks and get your life insurance in as little as 5 minutes. But anyway, he says, regarding market expansions, we've, in the past, we used to have these short cycles. It was like, okay, you'd grow for 3 or 4 years and then you'd have a recession for 2 and then you'd grow and then you'd have a recession. And anytime inflation would go up, the Fed would raise rates and that would usher in a recession, right? That kind of short-term teeter-tottering hasn't been happening anymore. Instead, Jerome Powell here says, with inflation so low, we have this new dynamic of basically long-run expansions. And he says that this right now could be the start of another long expansion, and they plan to be accommodative to make that happen. They want a long expansion. A long expansion is good for the Federal Reserve. And I see this question here from Frank in the live chat here. November retail report. Yes, the November retail report was substantially down. Retail contracted 1.1%. And this actually aligns with what the Federal Reserve says. The Fed says, look, the next few months are going to be very difficult. This is why we need stimulus. He also said something I haven't heard him say before. He probably has said it before, but I haven't heard him say this before, and this relates to stimulus. He says, look, monetary policy, us money printing, takes time because it's trickle down money, right? You buy a treasury bond, a corporation has more cash, it takes time for them to raise more people and for that money to circulate. So when they're printing money, they're being accommodated for the next 6 months out. So what the Fed was doing 6 months ago is really affecting us today. Whereas the Fed says, look, if we need an immediate injection, the only people who could do that is Congress, and Congress needs to provide more stimulus. He also said, when he was asked about state and local government funding, he said that state and local government funding, my estimation of what I gathered from him is, I actually think he doesn't think state and local government funding is as important As small business support is important, he did say he wants to see more PPP funding, that he's supportive of this. He did say that he wants more household stimulus, that he's supportive of this. But he, on state and local, he said, look, we've already lost 1.3 million state and local jobs, and that's really bad. It's much more than the job loss we had during the great financial crisis. And this is bad because state and local governments are very large employers, and we don't want to see massive more layoffs here. But he says that education is actually a big part of these layoffs. And a lot of these people will go back to schools and back to work when the economy starts opening up again. So this was really interesting that he kind of took the back seat on state and local and said the priority more is households and unemployed. Fascinating. Then he says he's going to, and the board will remain open to more asset purchases. So if they need to, if things just go bad over the next few months like they kind of expect, yeah, they are willing to increase the size of their monetary stimulus. Federal Reserve Chairman Jerome Powell also said that there's this interesting dynamic on inflation. And I know I'm kind of switching between topics here. I'm just going in the order that he was asked questions here. He said there's this interesting dynamic when it comes to inflation. And this has to do with expectations of inflation. And then I'm going to talk about the stock market, which that was crazy too. But so when it came to the expectations of inflation, he says, when you expect 6% inflation as a business owner, and I'm paraphrasing a bit here, you raise your prices 6%. And then you think, okay, well, prices will probably go up again 6% next year. And then you raise your prices again 6%. Right now, with us having basically 1% inflation or next to no inflation, people's expectations are that there ain't no inflation. Now, obviously, that's different if you look at the Bitcoin chart. I mean, you just look at Bitcoin over the last year, and I mean, it's just to the moon. Tesla's done better, but Bitcoin, not bad. Not some bad growth here, right? And a lot of this Bitcoin move is fear for inflation. That's why we see a lot of this move of money into Bitcoin as more stimulus talks progress. But he mentions that inflation dynamics are just very, very low right now. He also says the link between employment and inflation is barely there anymore. He called it a faint heartbeat. Then, okay, like the amount of gold he gave us today was insane. Then he talked about PE ratios, which every frickin' YouTuber who wants to talk about the market crash goes, look at the Shiller PE ratio, look at the S&P 500 historical PE ratio, all the price to earnings are so high. And I've made many counter videos to these. I just want to tell you right now what Federal Reserve Chairman Jerome Powell says. He says on PE ratios, yeah, they're historically high, but when the risk-free rate, aka the rate on like the 10-year treasury bond, which is like under 1%. Anyway, when the risk-free rate is so low, and it's expected to be low for a sustained period of time going forward, it's not unreasonable for you to have high PEs. It makes sense. Now, I'm going to break from what he's saying for a moment and just interject what I think. Usually you have hedge funds that balance bonds and stocks, right? But because bonds have such low yields right now, a lot of hedge funds are staying much more heavily exposed to stocks instead of bonds. That drives up PE ratios. When 25% of the money that's in circulation right now in the world was created in 2020, of course PE ratios are going to go up because people have more cash and they've got to park that somewhere. So going back to what he says, yes, they're high, but they're not as relevant with low rates as to where rates are now. He says that we're looking at leverage at financial institutions, aka banks, and so far, bank leverage has actually been very strong. When it comes to non-banks, corporate leverage is very high, and this is where you get a lot of people going, oh my gosh, look at the debt at corporations, it's so high. But Jerome Powell's going, yeah, but their actual burden to pay the interest on this debt is so freaking low because interest rates are so low. And that defaults and downgrades, like credit downgrades, are actually very low right now. We're not seeing a lot of those. He says more important is households, which went into the pandemic very strong, but they got hit hard with unemployment. And so again, why we want to see stimulus for households. On sort of a zooming out picture, he says regarding financial stability, that we have a mixed picture right now because yes, asset prices are high. Yeah, it makes sense that real estate prices are high and stock prices are high because of the amount of money that's in circulation and because of low rates, the low risk-free return. of Treasury bonds. But he goes on to say, we're not seeing a lot of red flags. He says we monitor red flags daily, and they're not seeing a lot of them. In fact, then he gets asked about the U.S. government debt, and he says, look, if you do a chart of debt to GDP, we're at very high levels. But if you do a chart of what it actually costs for us to service our debt, and you divide the cost of our debt by our GDP, we're actually on a much more sustainable path, were his words. So these are like huge statements by the Fed today. I mean, this was probably the most entertaining Fed meeting I've ever watched, because he basically just slammed the market crash bears on stocks, slammed the housing market crash bears. He basically slammed that, look, even if we printed more money, we're not going to see inflation, which is what's going to happen with the stimulus check. So he's kind of also slamming Bitcoin. Like, Federal Reserve Jerome Powell, I mean, he woke up this morning and he's like, I'm fighting today. I'm pissed at everyone. And he's like, the market's fine. Now, take it for what it is. There are many people who don't believe a word this guy says. But keep in mind, the Federal Reserve is an institution with like 2,000 economists. They do some incredible research. I'm inclined to agree with a lot of what he says. I certainly have my concerns and reservations. But I am investing heavily in the stock market. I'm investing heavily in the real estate market. So my actions certainly align with what the Federal Reserve is indicating here. So very, very fascinating. This entire Federal Reserve meeting was by far the most interesting that I have seen ever. So there you have the complete summary of what happened. Check out the amazing programs linked down below so you can learn my ways of building your wealth in stocks and real estate, and join me in those private live streams every morning when the market is open. So check those out, links down below. Email me if you want a bundle, coupon code at kevin@meetkevin.com. Shout out to Jeff Weibo. Go check out his channel. I was watching his Instagram yesterday you guys were playing that song about going residential or commercial, or the hotel versus residential. It was good. Jeff Weibo's got a good channel on YouTube too for real estate. Thanks everyone for being here, folks. We will see you next time.